city of the future, some people think that it will be like this. And they're quite right. In fact, everything you see now already exists. All the materials, all the ideas, these things could be put into practice immediately. But what about the city of the day after tomorrow? Say the year 2000. I think it will be completely different. In fact, it may not even exist at all. Oh, I'm not thinking of the atom bomb and the next Stone Age. I'm thinking of the incredible breakthrough which has been made possible by developments in communications, particularly the transistor and, above all, the communications satellite. These things will make possible a world in which we can be in instant contact with each other, wherever we may be, where we can contact our friends anywhere on Earth, even if we don't know their actual physical location. It will be possible in that age, perhaps only 50 years from now, for a man to conduct his business from Tahiti or Bali just as well as he could from London. In fact, if it proves worthwhile, almost any executive skill, any administrative skill, even any physical skill, could be made independent of distance. I'm perfectly serious when I suggest that one day we may have brain surgeons in Edinburgh operating on patients in New Zealand. When that time comes, the whole world will have shrunk to a point, and the traditional role of the city as a meeting place for man would have ceased to make any sense. In fact, men will no longer commute, they will communicate. They won't have to travel for business anymore, they'll only travel for pleasure.
What's up? Happy Friday, everybody. I thought that was very pertinent. I saw that on Twitter today in regards to another thread. That was Arthur C. Clarke. He was a science fiction writer in the earlier mid-20th century. Now, bear in mind, computers had just come out in the 50s and the 60s. So, you know, he had some basis to, excuse me, still a little congested. Probably got a touch of the vid, but you can't have COVID if you don't get tested, right? So, yeah, if you look at the patterns of history and you look at the present and you go into the future and you kind of do a little bit of selection of the survivorship bias, you can find people that predict the future pretty darn well. And what we're trying to do, let's be honest, when we use technical analysis, when we make speculation about trading and where something's going to go, we're trying to kind of predict the future, okay? And we're using past patterns to do that. And so the topic, the high point topic of this live stream today, and again, thank you for joining. I do this every week at 4 p.m. I stream it on Discord, TradingView, which I love, and YouTube. Links are all down below. The topic today is going to be looking at a pattern that I think everyone should be aware of if you are interested in trading. That is the anatomy of a bubble. This isn't quite my idea. I kind of lifted this, didn't steal it, but I lifted it from a friend, a good long conversation I had today of a perma bear. And it's worth talking about in relation to the stock market, you know, where the market sits right now in that whole bubble theory. Now, normally I'm very discountant of FUD, fear, uncertainty, and doubt. But we need to look at it and we need to say, okay, if the market does this price action, then this is how we're going to respond. And of course, as we get later into the live stream, we'll take a look at a market recap. We got to talk about Bitcoin. Hasn't done anything this week, but that in itself is significant. Again, an if-then. What happens if Bitcoin breaks the low from last week? What happens if it holds this support? We need to talk about that. And as always, if you have questions or if you have symbols to look at, post them in the chat and we'll look at them. I really appreciate doing this for people, and it helps to have you guys bring me ideas to look at because I can't look at every symbol out there. And so I like to take good ideas and set alerts based on them. and hopefully everyone can benefit from it. So post those questions and those symbols in the chat below. That's funny because companies are killing what? What are they killing, Jim? Good question, Falco. And 1 second. Sorry, I need to clear my throat again. Okay. What do you think BRICS Plus? Yeah, that's interesting. This week, I think he's referring to what was it? What countries joined BRICS this week? Iran was the surprise among the countries invited to join the bloc of emerging economies. Saudi Arabia, the United Arab Emirates, Egypt, Argentina, and Ethiopia. So basically, for lack of a better word, second world countries. This is kind of an outdated definition, but countries with thriving economies but just not on that center stage, that top that the United States, Japan, China, Europe are on. It makes sense economically for them to band together. That is a very interesting question. What does the future hold for that, and what does it mean? I think we probably have to look at why they are doing this. I'm a big fan of Peter Zahan's works. You know, he talks, he speaks about these kind of things, world geopolitics. He has some really good ideas, and one of them is that, you know, since the Cold War ended, the United States has not taken or needed to take that dominant world police role, especially now that the United States is energy independent. It could be, rather, excuse me. It can produce a lot of energy, you know, fossil fuels. We couldn't do this, you know, just 20 years ago when the leaders were making calculations about, you know, where to go to war, you know, in the Middle East. And so it stands to reason that we may, the United States, the country where I live, draw back from that role, and these other countries are going to have to look out for their own interest. It's, you know, for China, for instance, they don't have a very good source of fossil fuels. They have to use the South China Sea to get to the Middle East, and if we don't protect the oceans, they're going to have to take on that role as well, and they're probably going to want some help from, you know, South Africa, Egypt, Saudi Arabia, India. You know, that they all need to work together for their own mutual survival. Whereas, you know, I don't know if you know this or not, but most trade with the United States is done between Canada and Mexico. The whole Western Hemisphere is pretty self-sufficient in terms of, you know, international trade, but they need to have some kind of agreement. So it's really, they're acting in self-interest. But to the question of what it's going to do to the U.S. dollar, I think it's probably obvious that it will decrease the demand for the U.S. dollar and weaken it. I think that's pretty obvious. But there's really no existing country no country that has a currency with the liquidity and the stability. You know, opinions about the U.S. dollar notwithstanding, there's no other currency that can lubricate world trade. I mean, they can do, you know, currency transactions between one another, but for instance, China, they're constantly devaluing their currency. We don't really know what their economic information is accurately because they report what they want. Japan is constantly devaluing their country. Obviously, we can't use Russia anymore because, you know, Russia's been kicked out of you know, the dollar system. And all the other countries, like you could probably use Canada. Canada's very stable, but Canada's GDP is just so small. Like you can't run all international trade through Canadian dollars. And so you're still left with the United States dollar as going to be the default currency. But when these countries start trading with each other, they probably won't want to have accounts and individual trading. So supply, demand, it's a dangerous game. I don't know what the future holds, but that's what we're here for. We're trying to find patterns and go forward in that. So let's check. Hey, Suleiman. Yeah, I try to be very consistent with it. Yes, and we'll look at NVIDIA as well. Oh yeah, yeah. I mean, I've been listening to Peter Zahan since before he grew a beard. So he's I mean, he says pretty much the same things over these years, but I think the ideas he puts forth, they make a lot of sense and they get people to thinking. One second. I try to be consistent even if I am congested, so bear with me as I uh, clear up my stuffage. Yeah, let's take some questions now before we get into the topic of the hour. I think Nvidia has definitely been on people's minds. I've been following that drama over on Wall Street Bets. You know, a lot of people were very deep into Nvidia. I read some Wall Street Bets post about Nvidia. You know, people had calls that expired today. You know, 1 week calls, betting their whole accounts on it. I didn't save that, but I saw that, and I didn't. I have Nvidia shares, full disclosure, but they're from years ago. I mean, I've got Nvidia shares because that was really the smart buy through 2020, 2021, and I just never got rid of them because I mean, I when I get a graphics card, I get Nvidia. I mean, it's now it's AI, but you know they've always stayed ahead of the game. What do I think of Nvidia now? I'm not a buyer now, and that's just because I am temperamentally contrarian, but also I want to buy pullbacks. Our good resident breakout trader. I don't see him posting his trades yet right now. Casey, uh, he likes to play breakouts, and it definitely did a breakout. We're looking at the weekly right now, but I want pullbacks. And so, just looking, I'm going to talk about the price action in a little bit, but just to begin with, if I'm going to buy Nvidia, it's going to be back around 300 if I'm going to buy any more of it. Just that's the way I'm going to be because that is the 50% retracement of the big trend all the way from the turn of the market, which was October of 2022 up until now. We might find some smaller opportunities in here. I think if it pulled back to the prior all-time high, the post-COVID all-time high of 346, we'll get interested. But I'm not going to jump into it now. The risk is too great. I'm not saying it's not going to keep going up. If you've been trading for the last 3 years, you know that things can keep going as long as they want to. So I'm not saying it's over, but I will have to note that you had a past all-time high from July of this year, and then if you look at this week, earnings week's huge, big, everybody's looking at it. It opened higher on earnings day, and then look at what this week did. This week could not stay up there to maintain and push past that high. That's not good. That is not good. That's not what you want to see. You want to see a breakout that follows through. You want to see this week having closed above 480. That's what you really wanted to see for this thing to remain bullish. And as I was reading the Wall Street Bets people talking about how long they were going into earnings, I couldn't help but note as I watched the price action on earnings day, on earnings morning, I remember specifically someone having all their life savings in NVIDIA calls expiring Friday. And a commenter saying, wow, you need NVIDIA to be over 500 to make any money. Because I think that the implied move by options, you really had to get to make any money up around 515. And it opened up there, and I'm sure a lot of people that were big on NVIDIA calls going into earnings, which I think buying options into earnings is a stupid idea, by the way. I think it's incredibly dumb. It's okay. It's gambling. Okay, if you like playing the lottery, I mean, I'm not going to tell you that you're dumb, but the lottery is for people that are poor and poor at math, and the same applies to buying options into earnings. When you buy options before earnings, they've already priced in a big move up or down, and so you can buy a call and it goes up, but unless you get past that expected move, you're not going to make any money. So if you bet wrong, you're going to lose. If you bet right, but not enough, you're going to lose. So you only have one opportunity to get right. So the best you're going to have as a chance is 33%. Actually, it's more like 25% if you think wrong a little, wrong a lot, lose money. Right a little, lose money. Right a lot, make money. You only have a 1 in 4 chance of making any money on like any given earnings. I mean, you can think, oh, they're going to go up, but that's just a guess. If you actually know, you're doing insider trading, and that's illegal. So it's just not a strategy that I have any interest in putting my money on. I would rather play options after earnings once implied volatility has come off. Actually, let me bring up my Thinkorswim here for just a second. I'll show you that. So as Nvidia opened on Thursday, I bet there were a lot of Nvidia call owners that were very, very excited. But they weren't quite up to that point. I think 515 was the point they needed to be, where they would actually take profit or even be positive on these very short dated options. And so I know that they didn't close those options. And as the day went along and as we went into expiration day, I'm not in this trade, but I just know what happened. That as this market psychology, they sat there on Thursday yesterday, hoping this thing was going to come up and break the high. They can't close it. It's so close to being profitable. And then as we went into the day, hope just died. And even though they were right and Nvidia had blowout earnings, you basically close today before Wednesday's close. This is why you just don't play options into earnings. I've gotten to the point, guys, where I do shares, really and truly. This year I've done a few options things, but I really just own shares of things. If you look at my watch list that I talk about every week, these positions that I'm in or watching, I mean, these are shares. Yeah, you're not going to get the YOLO gains from them, but I'd rather own these shares for the long term. Maybe I'm just getting old. Maybe I'm just getting a little bit old, and I like to think long term. Hey, what's up, Casey? We'll talk about that here in a second. So, let's see. Which is a good short now? Tesla, Nvidia, Microsoft, Apple, Meta. You want to short tech? Well, as I said on Nvidia, we have to acknowledge it's in a bullish trend. But this week, this earnings week, that's a bearish sign that it could not maintain that high. And so as a contrarian, I didn't put a short on it, but I'm going to be watching this. My criteria for a short, I think I'll watch the daily coming into this week or coming into the next week. I would really like to see it try to break maybe the Ichimoku cloud, break this trend. I don't see a spike yet. It didn't really qualify for a spike up quite yet, but we may actually get one here on the weekly. If we have a weak close down below the red line, the Tinkinson, the Ichimoku Tinkinson, that triggers my spike indicator, which is my reversal indicator. By the way, it's free. If you send me a message on TradingView, I'll give it to you. It basically is a false breakout. That's what it shows me. Very powerful. Microsoft did something similar, since you're asking about Microsoft, a few weeks ago. Yeah. So Microsoft, a few weeks ago in July, it also, and there you go, there's that spike I was telling you about, where very good example. So you have all-time high of Microsoft, December of 2021, comes up, pierces it, doesn't really break it in June of this year, and then in July, pokes its head above it. This is a weekly, by the way, closes the week below it, and the following week, it closes back inside this range. The trigger for the indicator is the red line, the Tinkinson. That's really just what makes the shading happen. And then the ATR clearance is essentially how much higher did this high go above the last one relative to average true range ATR makes it significant. And so this is a significant spike, false breakout, signal of reversal. Another example off the top of my head that I was talking about today, Lockheed Martin. It doesn't really trigger the indicator because, hey, indicators are not perfect. That's why it's very hard to code an algo. But the premise, don't get too focused on the indicator. Focus on the false breakout. When everyone thinks something is going up and then it gets slammed back down, whatever reason, just think about what people were thinking in that situation. They bought it up when it broke the high. Now they're sitting at a loss. What are they going to do? Some are going to hold. Some are going to capitulate. But you really wanted this thing to keep on going for people to hold on to their wins. And now they're in a world of hurt. I got a little arrow there because it's just a really good example of what's going on right now. So, that's Lockheed Martin, Microsoft. It did this spike, and we're going to see what happens next week on, not Netflix, but NVIDIA, other N. What's going to happen there? Same thing. You have the false breakout. I mean, the week is closed. It's past 4 p.m. That's when I do the live stream at the end of the week. That's why I do it at the end of the week. It's because now we have a daily and a weekly bar that's closed, and we can evaluate. I wait for bar closes, candlestick closes, because that's the confirmation that can be very, very useful in giving you that final ruling. Also makes you patient for a true confirmation. So that's not good. That's not good for NVIDIA. I'm definitely not a buyer of NVIDIA. Hashtag this is not financial advice, but I'm not saying that you need to sell your position. I'm not selling my shares that I own from 2020 and 2021 but this is why I like shares. 2-3 years later, something like this happens. If I've got a option that's expiring next month, I'm going to be a little concerned. But if I've got shares, what do I worry? No. What I wanted to show you guys with, let's bring up, not that one. In Thinkorswim, unfortunately, I can't do this in TradingView. I coded myself a little indicator that shows me down here on the bottom half implied volatility, and I color coded it so that I can know, sort of like in a heat map sort of way, when IV, implied volatility, which is the measurement of how the market has priced options for a particular instrument. As you can see, as earnings comes from about 7/13, July 13th of this year, up until the day before earnings, IV ramped up and got way above average, which is the yellow line. I don't really ever want to buy options when IV is above average. Maybe I'm just a deal hunter. Maybe I'm just cheap. But you're literally buying options when they are overpriced. And option sellers, the Tastyworks people, they make their entire strategy based on this sort of analysis right here. They don't even care about the charts. They don't even look at charts. They don't believe in technical analysis. People that sell options, people that sell premium, theta gang, whatever, they don't care about price. They just have assumed that they can't predict price. They don't even try. They just look at implied volatility to be high or low. And you can see a very consistent pattern when earnings is approaching. Here's last earnings in May. In the month before, you get this rise in IV. Let's see, go back to the last earnings cycle. There it is again. Earnings in February the 22nd this year, from about January 13th up, a rise in IV. What this means for me, and what I'm telling you guys, if you want to play options before earnings, you don't buy them the week of earnings. You have a little bit of forward thinking. These things, you know when these dates are going to be. If I want to play NVIDIA earnings, okay, you don't wait until the week to do it. You do it 1 month before. Then you get the benefit of rising IV. It's like a tide that's lifting all your options prices. And if the stock doesn't do anything, you want, let's say you buy a call, you want it to go up. But even if it doesn't do anything, I bet you in most cases, try it out and see. Go into options and look. Let's say the stock goes nowhere. You got no delta movement, but you always have theta. Theta is the time decay. Your vega, which is the implied volatility rising, that Greek is going to offset your theta. If you buy an option a month out, just watch, where you would normally see the decay of time, if you get that IV increase, it's going to keep you flat that whole month. It'll bounce back and forth, but you're not going to see the same kind of decay because the option is getting higher and higher priced as that month goes along. And so you can sit in a call and not see that typically annoying. I think that's why a lot of people like weekly options. Well, I think they like them because they're cheap. I mean, they're lotto tickets basically. But also, you don't have that grind of having a long dated option where you have to sit and look at it in your P&L and you're like, man, this option's down because it's losing money every day. That's just the way they work. But you can offset that if you wait. Now, another thing that you should extrapolate from looking at implied volatility and option pricing is after earnings comes out, you can find some really, really good opportunities. So Home Depot was an opportunity from earlier this year. And it happened that, if you guys watch my live stream, then you know this. If you don't, you'll notice on my chart, I don't have that many technical indicators. I really just have a single little Fibonacci, and I don't even have all the Fibonacci lines on it here. I basically go from the low of COVID up until the all-time high, and look at that. 280 on Home Depot is a 50% retracement level, and look at how well it held it. I trust this. The two things I trust, false breakouts and 50% retracements. And so earlier this year, Home Depot had earnings, and it did that little spike right here, where, here's our low from March. The earnings spiked below it, did a false breakout, triggered my indicator at the 50% level. Boom, buy. But let's take a look and see what the IV was doing here. Now, I did shares, but let's just see what the IV was doing there. Yep, so right before earnings, you had a rise, and then, let me make this bigger. Hold on. There. So here's earnings. Actually, here's the day before earnings right here. Average IV was at 31, and it dropped all the way down to 24. I don't know what the Vega was there, but that's actually pretty significant. That's a lot of money out of those options. Then you buy your call, longer dated because you're playing off the weekly, and you're basically getting an option cheaper. Now, this isn't a fantastic example because IV, as you said, continued to drop, but if you were in a call, you're getting the benefit of that delta as well. Point is, wait until either a month before earnings or after earnings when the IV has gotten crushed before you make these plays. Or stay on Wall Street Bets and don't listen to me and roll that dice. So up to you, your money. Are we losing connection? Are we still good? Hen? Sorry, I was just looking at the chat here. Leon thinks that BRICS is going to create a new currency backed on gold. That is possible. A lot of people would have preferred it to be Bitcoin, but I don't see that happening, especially since China has very much banned it. Gold, by the way, I am short, just talking my book here. It also did a false breakout, double top, head and shoulders. What do you want to call it? I don't really focus on that kind of stuff. What I did focus on was in May of this year, it did a breakout on May the 4th, be with you, came back down into it, triggered a spike, and that short, I'm looking for gold to continue slowly grinding down to 1850. So that's what I'm looking at on that. You do not find implied volatility on TradingView, unfortunately. I'm very sad. I have asked them many times, but that comes from options data, and that's a whole different data set that either they would have to pay for or you would have to pay for, or you get yourself an account on Thinkorswim or Tastyworks. You may or may not need to fund it just to get that data and do IV evaluation. It's very, very critical to you trading options that you understand IV. Robinhood app is not going to tell you what you need to know, allow you to chart it or know if it's relative high or relative low. But play around with those two platforms and you'll get that data. I think you might be able to find it on a practice account as well. It's very useful data, very useful for understanding how options work. But yeah, so would BRICS be based on gold? Let me throw this out there. I think that with all the talk of CBDCs, I mean, look, they're coming. They're coming. There was a time maybe where we could have potentially had an alternative currency. You know, it would have been nice if, you know, we had if someone had invented a monetary system outside of government and corporate control. Probably the best time to invent that would have been about 10 years ago. And if someone had done that, then it would have been good if the people that used it the most and were really pushing the technology made sure to keep it outside of, you know, government regulation so that government couldn't stifle it, tax it, regulate it, giving them enough time to come up with a competing digital currency. I really wish someone would have invented something like that, like a coin that was based on bits and bytes, maybe like a byte coin or something like that. But if they did invent that, they really should have kept regulation away from it. And that would have, you know, not made it such a pariah when they did finally release CBDCs. But no one really invented something like that. Or maybe they did and they've kind of ruined it by inviting regulation from all the different SECs and stuff like that. But I think that basically what they're going to do is have their own stablecoin, their own CBDC that they will create. And that is what they will base it on. Gold could be a component of it. You know, here's the interesting. I don't think many people know this, but the Swiss franc has, for a very, very long time, been a very stable currency. Now, you look at this; it's USD, CHF. If you're in Forex, you got to think of it as a division equation. So basically, what this means is the dollar is going down relative to the Swiss franc. Put better, let's do Swiss franc USD. And in that case, you can see that the Swiss franc has remained very stable and has recently been pretty much appreciating that. You can also see Euro or Swiss franc CHF Euro. By the way, if you wonder why Swiss is abbreviated CHF, it's because it stands for Confederation Helvetica. That is, I think, the official name of Switzerland. So, you know, for a long time, you know, the Swiss, you know, they had all that gold from World War II, but actually how the Swiss National Bank backs up their currency is with a diversified portfolio of stocks. Like they have a lot of Amazon, they do have gold, and they have commodities as well. They own assets. The Swiss franc is basically an asset-backed currency of varying things. The Swiss National Bank is basically a giant hedge fund. And so what you can really interestingly see is how, if you, let's go to a weekly, where's October? Yeah, so the market turned in October of last year, and that's about the time that it did. So there's a high correlation with asset prices, the Swiss franc. But the reason I'm saying this is because if the BRICS does backing for, you know, a currency, I would fathom to say they will make it a modern method. I think it will be digital. It will be effectively a digital currency. And I think that they'll back it with a bunch of different assets, you know, because a lot of these countries that we're talking about, they have commodities. You know, they have oil, they have natural resources, you know, minerals, things like that. And so I think really the price of these are going to be more applicable to these countries' economies. And so they'll be more likely to back it on a hodgepodge, a collection, a conglomeration of these assets and put it together in sort of maybe an index kind of backing. As far as it just being backed off gold, I think when people, when I read media and we don't know the future, but I think you have when I read Zero Hedge and I see an article by Peter Schiff, it's always about how the world's about to end, and in order to protect yourself, you need to buy gold. That's because Peter Schiff runs a uh, gold selling service. So every time you hear Peter Schiff say something, you need to, like, in the back of your mind when you read it, you need to imagine he's saying, "Buy my gold." It's very consistent. He's been doing that for almost 20 years now. So when you read about how, oh, BRICS is going to back it with gold, be very careful of the source, because I bet that maybe you're reading that from someone that either has a lot of gold exposure, or they're trying to sell the case for why you need to buy gold. I mean, the technicals right now, notwithstanding my position on it, I think there's a lot of sentiment that, this country's going to do this country's going to do that, therefore my bags will be lifted. But oftentimes you got to be careful if that's not like someone telling you that, or you're reading, the opinion of some hedge fund that's already long that asset. And they want to make a very convincing, smart case as to why you need to buy their position for them. So, all right. Casey has got TGT and AMC. TGT, talked about this a little bit this week with some friends who are trying to bottom pick it. I don't think that's a good idea. I think that Target, if I do my 50% analysis from the April 09 low, we're going out to a monthly chart now, to the all-time high in November of 2021, that 50% level was 146.99, let's call it 147. Amazon did something very similar, where you had this all-time low back in 2001 up to the all-time high, which is set last year, and it came down and held its 50% at 94.46 at the end of last year and into this year. Picked up Amazon shares this year based on this. This is a good hold of a 50% retracement. It's Amazon. Your girlfriend, your wife is not going to stop spending all your money on it. Okay? There's no other Amazon. Okay? They're not going to go away. Yeah, I'm really comfortable saying that. Amazon's not going to go away. That's a really good place to have money invested in, no matter what it is. And the economy could crash, but people are still going to need to order their stuff, okay? The flip side of that, both thematically and technically, with Target, it also had an opportunity at that 147 level to hold its 50%, and it did not. It lost it in May of this year. Furthermore, it's continued down. This is a dangerous, dangerous, dangerous situation for a stock. One of my quintessential things I go back to is to look at Zillow Group. Zillow Group was a learning experience for me that I shared to everyone else, where it did its same 50% hold. Think about it this way. If a trend goes on, you got 100 people, 100%, all long there at the top. Price pulls back to a 50% retracement level. Imagine that 50% of the people are still long, 50% of the people have still sold. That's the difference. Or the majority of people selling, the majority of people buying. Think about it that way, is why the 50% works. And so if you lose that 50%, I've got this chart off because I bring it up in almost every live stream. I bought it in May of 21, and then when it came down to July of 21, I got out because it broke. It violated. It closed weeks below that 50% level, 114. Let's just play this out. And so you have to be very, very wary of when a stock does this. What happens when it breaks the 50% after you have a big, obvious trend like this? And this is a multi-year trend. you have to be very careful because now you enter into what I call the valley of risk. This is that point where people come onto my live stream and they're asking, like, it's down this much. Like, oh my goodness, it's down. Like, I bought it at 114 and I've just been bag holding it. I'm down about 47%. Oh, what do I do? Like, I can't sell it now. I'm down half. What do I do, Norok? And I'm like, well, sometimes you just have to take that because you don't know how much lower it can go when it goes into the valley of risk. There's many, many examples, and not every stock does this. Eventually things turn around. Tesla turned around, made a big rise off of its break this year, but you got to keep in mind things like this. What is Zillow at even right now? I guess come back a little bit, but I'm so much better off that I got at it 100 when it broke it than sitting here at 50. I've got literally twice as much money as I would otherwise. PayPal is another one where people come in and ask me, like, what do I do with PayPal? Well, PayPal just, again, there's your 50% at 192, 196 PayPal back in December of 2021. It broke that level. Down it goes. Down it goes. It's just a nice line in the sand to say, okay, you know what? I'm going to hold this from not. I'm not going to sit here and bag hold this stuff. And so with Target, I don't know what's going to happen to it, but I don't want to be in it because it has given up that leg that really could make a convincing case that this trend is going to continue. Because you want it to. You want it to hold here like it did for the most of 2022. All that bearishness in 2022, it still managed to hold its 50% retracement. You want that thing to hold, and you want it to get up to that high. You want to be golden. I mean, a lot of stuff does this. You got Caterpillar. That's one this year where it's done it twice. It held the 50% in September of this year. There's your 50% from the COVID low to its all-time high then. Boom, 50%, holds it, comes up to the top. And then earlier this year in May, from this trend to this trend, it's just stepping up. This is what you want to see. You don't want to see it give up those 50% because then you're just guessing. This is a system. So that's Target. Yeah. Casey, I agree with you. A breakout on Target is warranted. AMC. What are people doing? What are people doing here with AMC? Seriously? All right. Short entry. Are you wait, AMC short entry at 12. I thought they did a reverse split. I thought it was like $2 or something like that. Oh, okay. So yeah, so you want to short it some more? Yeah. I mean, I'm at a stock this low. It really kind of comes into a risk reward situation. Now that it's at 12, they've done a reverse split, I guess. A reverse split, I guess. Now you may have the potential to make some money because 12 is bigger than 2. These things are numbers. But you're also coming down to whatever this split adjusted support is right here. And I would rather see it break that technically. But this is not really something I was short because, I mean, the most you're going to make is still that 12. With Target, on the other hand, because, I mean, think about it. The lowest it can go is 0, okay? So if they have some, and the thing about AMC, man, is, I mean, there's still, most of the autism has kind of gone away in the last 2 years. But there's still the risk of autism. And you don't want some autism to enter and pop this thing up to 30 because your risk is unlimited. So I like your Target. I don't like your AMC, just being honest. So I definitely like the Target, though. I actually probably, saying that, I need to put my money where my mouth is on Target. I think this is a good long-term short. You can even maybe do a like a hedge trade on this, like a hedge play, like a pairs trade. What's Walmart doing? Oh, look at that. Walmart's not having problems. I don't really get into the fundamentals. I'm not sure why Target is doing so poorly. I do know that lots of other retail, I know Dollar General is doing very poorly. I think Foot Locker or something. I think Dick's Sporting Goods. Dick's has had a lot of shrinkage, actually. A lot of shrinkage going on at Dick's. And so that they're definitely hurting. So a lot of retail, a lot of brick and mortar store retail is uh, definitely not helping. But I think Walmart has a good online business. Yeah. What is FWDYS for when you do your stuff? All right. Let's see. Oh, Bjorn, what is a good short now? Good question. I need to get into the topic that I promised, and we'll talk about that a little bit. Um, Hello, Worley. Two questions. Sure. When measuring the 50% retracement, how do you decide where to measure from? Bottom of the fib level and the current thoughts on. Yeah, I definitely need to talk about BTC. That's a very good question. There is some nuance to it, but let's just keep things simple. So we're looking at the S&P 500 right here. You want to go to, sometimes it's obvious. Ideally, it should be obvious. So keep to things that are obvious, like the COVID low of the S&P 500 and the all-time high. And I use highs and lows. I don't use closes. Just be consistent. And that's where I'm going to draw. So you want to capture that trend. Like, what is the significant trend? Okay. So in the current trend that we're in, the micro trend, not the macro trend, it would start in October and it would currently go up to this high. And so the 50% of the recent trend we're in from October of last year, that would be at 4068. Okay. With Bitcoin, since you asked, Bitcoin plays into this as well because in this, we're looking at the weekly of Bitcoin. We have the macro trend from the all-time high in November down to the low of November 2022, the FTX crash. And so that sets up a resistance at 42,222.5. But you also, in the nearer term, you have a major bear trend from here to here. Okay, so we have to keep that in mind. So this is where you have to kind of use your eyes and some nuance, but it also lets you set multiple levels to look at because they can have the potential of happening. Price can respect these levels when it happens. And so we wanted to a few weeks ago, and we did in the live stream whenever this hit its high, from that same low up from the the April 2022 high. Because really, if we zoom in, we can see that this swing in April of 2022 was the top of what followed, which was the real latest leg of bear in Bitcoin. And that took us down to November. And so that trend is something that we need to measure. And sure enough, that set up the short perfectly. I didn't plan it this way. The perfect hit back in July of Bitcoin up to this level. Now, by the way, these lines that you see that go flat, these are retracement levels. You can find them by searching for them under indicators in TradingView. Free, don't charge. Just do a search for retracement levels. It's nothing fancy. It's just a 50% retracement of like 200 and 800 bars combined. So another way to look at 50% levels is use Ichimoku, because Ichimoku is based on 50% levels. And that's where all fundamentally I got into 50% is from studying Ichimoku. But I draw it manually now because Ichimoku is going to be set to a certain number of bars, and you really have to look at what is the actual trend. You know, if we use Ichimoku back in March of this year on Bitcoin, we would have been able to see that, yes, the 50% that makes up the bottom of the cloud in March of 23 this year actually happened to line up with the 50% from the November low to the February high. And that set up a really, really good buy that I posted about on TradingView there. And that 50% worked. And then we had another trend that happened from that low to here. That may be the high. Let's see. Adjust as we go. And then that set up another 50% level that it held back in June. And then, as we said, it came up to the 50% of this in July, and now it has come back down to that prior support, that prior 50% level, and that's where we're kind of hanging out. Right here. That's where the price stopped. All right. And so, what are my thoughts on Bitcoin since we're on the topic of it? It's got to hold. It's got to hold here. I said this last week that for Bitcoin to the best case for Bitcoin, well, the best case for Bitcoin is for it to go to the moon, of course. But really, realistically, what's going on right now is you have it caught here at this support of, let's call it 25,000, excuse me, and it's holding it. It's doing its little consolidation thing. If it breaks, then it's going to come down to the next level. It's going to go from, it did a stair step up. It'll probably do a stair step down. Given the way that I look at any 50% retracement, if we're looking at, MetLife, MetLife is another 50% from earlier this year. We're at $50 a share. Just happened that way. What I'm looking for is for that 50% to hold that level, come up, retest the high, hopefully break it. Caterpillar, we talked about earlier, it's that same, it came up, held it, broke that high, held it, broke that high. So you're looking for, and this is Elliott wave, basically, the waves to go up. That's what you want to see. Now, we have to be honest, and we have to, I'll see if we can do USD BTC. Nah, I won't, let's do this. We have to turn our monitors upside down, and we have to consider the very real possibility that if this 50% on Bitcoin is going to play out as a textbook case of a 50% retracement, that means that it needs to come down, or we must assume that it needs to come down and retest the low. It needs to come down and retest 16,000-ish. And that is what it would imply on this longer term chart if it plays out. And of course we'll know the supports as it comes down, but earlier this year I took a lot of flack for this. But there were two bullish trades that I took that I posted here on TradingView. And one was based on the Ichimoku breakout in January of this year. That was when price first crossed above the cloud. Note how it tried to get above the cloud here, closed above the cloud in November, but momentum, the Chicago, lagging span, whatever you want to call it, did not get out. And then we had FTX crash. So that little confirmation kept you safe from there. Now you have both and you're good to go. And furthermore, you had that 50% pullback, which got close to getting out of the cloud. But again, no confirmation, bullish trend still on, and onward it goes. But by the same token that we evaluated this being a proper breakout, this being not a bearish breakout, so we can continue holding, when price and momentum crossed the cloud back in June of this year, it crossed right here, it closed, it technically got out, and I closed my long breakout from January. So grab that much, posted about it, put my idea out there, and all my Bitcoin Maxi friends in the next few days were, if you remember Nelson. It's fine. I mean, I said at the time, the bullish trend for Bitcoin for 2023 is over. Well, where are we now? In trading, it doesn't matter being correct. It doesn't matter that it did go up a little more. What matters is that you have rules and you follow them because they work in most cases. So that's what I got on that. You're welcome. You're welcome. All right. What else we want to look at? All right, get your symbols that you want to look at in the chat because we're coming up on the hour. I'm going to look at any questions you guys have. I stick around as long as you have them. And then I'm going to add in my little final piece, which was the thumbnail, essentially, that I need to start getting to at the beginning because you guys get me talking and I'll just go on past my topic. So it could wait till next week, but I'll give a little precursor to it because it was today that I was made aware of it. All right, let's see. MasterCard. You know, ooh, I mean, that is definitively, I think, are we looking at the weekly? Yeah. There's our all-time high in April 21. So what's interesting about this is you had a close above it back in July, and it looked like it was going to support it, but now you got to close above it again. That's bullish. It's kind of tricky, but technically it's breaking that high. You want to talk about fundamentals? Consumer savings, I think I read a report from the Fed saying that, all this excess money that consumers had saved up after the pandemic because they're afraid, they don't have stimulus checks. They think that's pretty much depleted now. And of course, consumer debt is ever increasing. Interest rates also rising means that credit cards can actually, charge more, I believe. I'm not sure if it's like a one-to-one correlation there, but yeah, the business of, what about Discovery, DFS? Let's Discover. Not really the same consistency. Where's the 50% on that? I'm curious. I want to set an alert there at 80. Be interesting to see if it hits there. Well, MasterCard's doing something right. TNA. All right, that's are you talking about the Bull 3X? What is this? What is that right? TNA? I don't really like leveraged ETFs. I don't, because usually they have risk asymmetry. What is it? What is it, Gig? Yeah, because I mean, the basics of leveraged ETFs, they work really good when they work, and they work really bad when they don't. And that's because of math. Math is a thing where if you have a single product, let's say that a stock goes up, or an ETF, whatever it's based on, goes up 10%. Okay, you go from 100 to 110. All right, great. You got a 3x leverage. It goes from 100 to 130. Okay, now what happens if you go down 10%? Well, if you have a single product, then you're going to go down 13, basically, because it's 10% of 130. So now your 130 and a single 1x is going to go down to, what was that, 117? Yeah. But if you have a 3x leverage, 130 times 0.3, you're going to go down 39, and so that's going to take you down to 91. So you've now did I do that right? Yeah, I think I did that right. Yeah, so if you lose 10% in the, you'll lose 13. If you lose 10%, no, hold on, 130 times 0.10 times 3. Yeah, it'll be times about 3. It's going to blow you out because you're going to take a harder hit on the downside than the upside because it's multiplied by 3. And that's the whole thing goes back to, if you lose 10%, it's a lot worse than, making, because that's why it's very hard to come back from losses, essentially. So math, don't do leverage ETFs. Net Cloudflare. This is one of those where we would have looked at the 50% in December. It broke it, came back up to hold it as a resistance multiple times, and then we don't want to be an owner of it as it goes down to here. At this point, what I would be looking at is a potential for it to get out of the cloud here and then maybe trend. I think here we have a short-term 50%. So if you want to try to played off base. You had an opportunity here in the middle of the month. So you could look at it that way. Try to play that breakout happening ahead of time with a position like so. Try to break out that consolidation, but it's in a consolidation, so it's kind of risky. So, all right, let me scare you guys. Ooh. S&P 500. What does this look like to you? What does it look like, guys? Give me some answers. What does it look like? What does this chart look like? It's going up. It's going up pretty quick. Does it remind you of anything? What does it remind you of? Plagiarism. All right. I'll tell you what. If you tell me not to say it, I won't say it. But can I use it? Did you post it on Wall Street Bets yet? Answer. I'll respect you. Okay, thank you, sir. I'm just going to spend a quick topic on it. So, a friend of mine, good friend of mine, Black Marble on my Discord, he pointed this out to me before, and I've used this before on not this, but by the way, if you want to do the overlay, you can do it in TradingView, like so. Let's see if I can make this match up. The anatomy of a bubble. Oh no, don't do that. Okay, there we go. So this is a setup that I think people should be, if you're trading, you should be familiar with. Oh no, it's doing a regular thing. I need it to line up a little bit better. I need to be able to go like that. Good point. A fib retracement level. Yeah, double top, bearish retrace. Yeah. So there's nuanced ways of looking at this using Fibonacci's. But thematically, there we go. In principle, what we could be looking at, and I'll tell you what I'm going to be looking for to see if this is true or false, is the bull trap where you have that attempt to reach the all-time high, but you have a failure, followed by the end of the market as a whole, or whatever you want to call it, okay? So, how does this play out? Well, what you have to have is price roll over and capitulate into fear. Let's see what that looks like on the actual market. And I've been watching this on a day-to-day basis. This is the S&P 500. And what you have in any given year, I say this every week, is you have at least 3 -5% plus or minus corrections in any given year. We had one of these in March, which from high in February to low in March was about 8.5%. Essentially, you can have like 5% and then up to about 15%. That's a correction. 30% is a crash, basically. And we had that from the December 21 high, got down to about 27%. Excuse me, a crash. I used to have a little table for this. But we needed to have some sort of a pullback. And what we got from the high, notice there's a spike here as well, that false breakout on Thursday, the 27th. We got a 5 and, what do we call it? 6%, a 6% pullback that went all the way down to last Friday. And Friday pulled back down to that low from June And that's basically where we're holding right now. As far as using Ichimoku to kind of contain this bullish trend, we pulled back to the cloud. It still contains, still bullish. But if we break the Friday low, if price breaks, not this Friday, but the last Friday, August 18th, that low of 43.50 on S&P futures, or if we want to use this in SPY terms, that low is 433. Let's call it 430, and let's use SPY because a lot of people use that. So if we start to go down into this area going into September and October, basically from 430 and below, that is not a good sign. Market's at a precipice. It needs to hold here, come back up, retest that high, and break it, and come up and make a new all-time high. It doesn't have to do it this year. It just needs to progress to do it. At that point, the bubble will not have popped. Now you have a new high. It comes up and closes above it. You got confirmation. There's going to be people doubting it, of course, but that's bullish. But if we start to break this trend that began in October of last year, if we do actually on the daily start to trend on the wrong side of the Ichimoku cloud, I mean, there's nothing magical about it. Essentially, like I said with Bitcoin earlier this year in March, you had price poke its head below the daily cloud, but you did not actually get momentum out. Same thing with Bitcoin. A lot of people don't like technical analysis. They think it's just, astrology for men. Maybe it is, but it's a really good guide for yes, no, making decisions about what the state of price action is. And so you have little chances of this happening, and then you wait for that confirmation, and it did not actually trend in March. A lot of people did. There's a lot of it's happening going on in social media, thinking that, these banks are all going to fail. The U.S. system is going to collapse because these two banks with high loan-to-deposit ratios failed. Oh, panic. It was actually a great buying opportunity of this year, as a matter of fact, as these things typically are. I maintain that this little pullback right here, should it hold, is the buying opportunity going into this year. But or the latter part of the year, but if we do break from this and we do start to trend on the bearish side of the cloud, that's when we do need to start considering the bubble potential. Now, furthermore, if that bubble, let's just draw it out. Here's supposedly the run up. The initial bear trap was 2008, and then here's the bubble. There's the bull trap. There's the return to normal, and then here's where fear sets in. And so the real test, and we're far away from it, it could take a while to come out, is going to be that October low. If we fail to make a new high, and then over the course of the months coming up, we actually break that October low, there is nothing that I can say in all my years of experience to convince me that I don't need to really start hedging, if not going to cash. Because that's when this actually does start to look like the popping of a bubble. Those conditions: no new high, break of the October low, which was the bull trap. That is the if-then scenario for this to actually play out as the bubble. It's a lot of percentages between now and then that I'm going to give up for confirmation. It could hold that October low, and we could have some kind of a new pattern emerge. But if it starts to follow that anatomy of a bubble so closely, even if I'm wrong, I still had to follow it. I still had to be cognizant of this pattern, which has played out many times going back to the 1600s with tulips in Amsterdam. I have to pay attention to that, and I have to acknowledge it. I have to. But we're not there yet. but we know when it begins. And so going into next week, as I said, on stocks, we need to be very cognizant of the 433 low from Friday, August the 18th. That's what it needs to hold. That is what it needs to hold. And if it breaks it, then we have a different conversation coming into next week. So, all right. Thank you all for joining me this Friday. I hope you have a great weekend. I do this every week, and we'll see you next Friday, 4 p.m. UTC -4. Trade wisely. See you guys.